Hello students, welcome to the Rapid Revision Route, and today in this video we are going to revise the topic tax deducted at source and tax collected at source, means TDS and TCS. So let's begin this revision video. When we are talking about TDS, we should read the section number 51. Section number 51 says that central government has the power to make it compulsory. Central government has the power to make it compulsory for the following persons. These are the following persons. For the following deductors to deduct tax at source from payment made to the supplier of taxable goods or services. It means one thing is clear. Here the deductor is the recipient. The deductor is the recipient, and the deductor being the recipient of goods have to deduct tax at source from the payment is going to make to the supplier of the goods or services. So let's see who are those deductors which are compulsorily forced by the central government to deduct tax at source. See, section number 51 1A, 1B, 1C and 1D. Section number 51 1A, central government and state government departments. Yes, the departments of central government, state government or their establishments. B, local authorities. C, government agencies. And D, the notified persons. Let's see who are the notified person. Any authority, board or any body set up by an act of parliament or state legislature, which is being set up by the central government or the state government or any other establishment of the government with 51% or more participation by way of equity or control is with the government. See, any type of authority, board or any body which is set by the government, which is of the government, yes, set up by the government, or any government establishment in which government is having more than 51% of the right and the control of the equities, yes, that authority or board. And secondly, society established by the government or local authority or state government. Third one, public sector undertaking, means public companies. These are all the three notified person under section 51(1)(d). Now, this 51(1)(a), B, C and D. These are the four deductors who are mandatorily required to deduct tax at source. Yes, and this mandatorily provision is being made by the government. Yes. So let us see, is there any category of person who are not liable to deduct tax? Yes. There are only two cases where no liability to deduct tax by this notified person. See the first and second. First, when any supplies from PSU to another PSU, when there is a supply of goods or service from one PSU to the another PSU, or where there is a supplier service among these notified persons. Say from 51(1)(a), any government department is supplying some goods or services to 51(1)(c) government agencies, or vice versa. So in such cases, when they are supplying the services between this notified person, no requirement of deduction of tax at source. So here we have seen section 51, compulsorily the meaning and definition of deductor, the cases where no deduction of tax is required. Now, sir, if required to deduct tax, when the deductor should deduct the tax from the payment made to the suppliers. Now here the supplier is the deductee. When the suppliers total value of supply of taxable goods and services exceeds rupees 2,50,000 exclusive of taxes. See, exceeds rupees 2,50,000 exclusive of taxes as per the invoice. Means as per the invoice, if the value of supply excluding taxes under the GST is more than 2,50,000, the provisions of TDS under section 51 will be attracted, and the deductor has to deduct TDS at the rate 1% if CGST is there, or 2% if IGST is there, or 1% if SGST is there, as the tax deducted at source from the payment made to the supplier. So these are the provisions. Yes. Now see some procedural provisions. The tax deducted by the deductor should be deposited to the government account in what will be the time limit within 10 days from the end of the month. It means if any tax deduction at source has been done by the deductor should submit or deposit it in the government's account before 10th day of the next month. Yes, of the succeeding month, next month, before 10th day of the next month. This is the time limit for deposit of that deducted amount to the government's account. Now, another second responsibility of the deductor has to issue compulsorily a TDS certificate, to the supplier, the deductee, and this certificate will be issued under GSTR 7A. This TDS certificate will be issued under under GSTR 7A. What will be the details of this certificate? That certificate number, GSTN of the deductor, name of the deductor, GSTN of the deductee, legal name of the deductee, trade name if any, tax period for which tax is deducted and accounted for in GSTR 7, details of the supplies and amount of tax deducted. All these details will be given under the TDS certificate issued by the deductor under GSTR 7A. What if the deductor has not submitted the amount deducted to the government's account within 10 days from the next succeeding month? If so, then penal provisions will be attracted and he will be liable for penal interest under section 50. Now, once the amount of tax deducted is submitted to the government account and the specified required return is being filed, so what will happen? What will happen? The amount of TDS will get reflected on two portals. One, the electronic cash ledger of the deductee. On the deductee's electronic cash ledger, it will be updated and return filed by the deductor. When the deductor will file return under GSTR 7, this information will be reflected in his return and also in the electronic cash ledger of the deductee. Yes, this amount will be reflected on both the sides. And the same thing as the procedure of income tax of there is of the statement of 26AS TDS certificate, like this same provisions will apply here also. Now, if any amount determined under section 73-74 of the act, then also it will be included in the return itself. Now, in case of any excess or inherent deduction, it may happen in some cases, that the deductor deducts more tax as per required. Say instead of 2%, they deducted 4%. Then, if excess tax has been deducted, so the deductee will get a refund of that excess amount, and if that refund is delayed, so there is also a provision for the interest on the delayed refund under the act. Also, the deductor who is going to deduct tax at source under section 51 is required to get compulsory registration under section 24 of the act. He should take a compulsory registration under the act, then only he can have the permission of deducting tax at source under section 51. There is also the provision of registration as per the known provisions of the act under section 29, from where he can cancel the registration also, and the registration procedure as per section 25 will be applicable to the person we want to register under section 51 here. Now coming towards the TCS portion under section 52. So see here, under section 52, the e-commerce operator, that is ECO is required to get registered and mandatorily is required to collect tax at source from the supplies made through the supplier from ECO. So here the responsibility of e-commerce operator is to compulsorily collect the tax at source on the net value of taxable supplies made through it by the supplier. Here is the word net value of taxable supplies. Sir, what do you mean by net value of taxable supplies? See here, net value of taxable supply means all taxable supply except supplies made under section 95. Yes, except supplies made under section 95. All taxable supplies minus all taxable supplies returned to the supplier minus the returned portion. It is very simple, very simple. What are the taxable supplies made minus what returned portion from the supplies? That will be your net value of taxable supplies. On this net value of taxable supply, you are going to apply the TCS rate and collect the amount. Here there is no threshold limit as like TDS. Here there is no threshold limit. Now what is the rate of TCS? If intrastate supply 0.5% of CGST and 0.5% of SGST, and in case of interstate supplies 1% of IGST. These are the TCS rates. Now again, as like under TDS, there was a provision of submitting the deducted tax amount to the government's account before 10th of the next month. Here also, the amounts so collected by ECO by way of TCS should be deposited to the government's account before the 10th day of the succeeding month. Before the 10th day of the succeeding month. And just like under TDS, the registration procedure here the same. The person who is deducting tax who is collecting tax at source under section 52 has to make a compulsory registration as per section 24 of the act. Same provisions apply here, and mandatorily the officer have to approve the registration within 3 working days from the date of application. Now further, the requirement of filing of monthly and annual statement by ECO. Under the TCS provision, what are the filing of monthly and annual statement by ECO? See, an electronic statement under form GSTR 8 should be filed by the ECO. See, the ECO is going to file GSTR 8. In the GSTR 8, he is going to mention all the details of outward supplies made by the supplier through using the ECO, and all the returns supplied which are returned to the supplier through ECO. So all the details of the supply, outward supplies of goods and services, and all the supplies returned through it, all the details will be mentioned under GSTR 8. Yes, and accordingly, the details of tax collected at source submitted by the ECO will be made available at the portal to the supplier, registered supplier, for claiming of amount of tax collected in his electronic cash ledger. Yes. After proper validation, the amount collected and submitted by the e-commerce operator will be available to the registered supplier to review that amount and the validation process, and at the final, his electronic cash ledger will be validated with the amount of tax collected at the end. Now, this is about monthly statement. This is about monthly statement. Also, annually, an annual statement in GSTR 9B is to be required to be filed by the ECO, and the due date is same as of annual return, that is 31st December of the next financial year. Yes. Then again, next, notice to the operator. See, when the e-commerce operator receives a notice, first thing to check is that that notice should be issued by a commissioner or an officer who is not below the rank of a deputy commissioner, and the e-commerce operator has to reply that notice within 15 working days. Yes, the commissioner should get the reply within 15 working days of whatever information the commissioner has furnished from the eco. Yes, and the last one, if the eco fails to furnish the information as required by the notice, penalty of rupees 25,000 will be charged to such e-commerce operator. And here we have completed the revision of the topic tax deducted at source and tax collected at source. So meet you in the video of the next topic. Up till that, bye bye. Hello students, here I am with you in front of you for the announcement of our regular upcoming batches. Our regular upcoming batches of CA Inter Taxation are starting from 21st of September, and foundation all subject batches starting from 25th of September. And here this word again, this batches will be in 100% English language. Yes, 100% English language. Yes. So for more inquiries of early bird discount and shocking rates, you may contact on the given number. So meet you in the regular batches. Bye bye to all of you. Preview.